The Central Bank of Kenya has floated 2 Treasury bonds for the month of October 2025, giving investors an opportunity to invest in Treasury bonds again in the month of October 2025. We are here to break down the features of the 2 bonds, and in this video we will be dealing with one of the bonds, that is the FXD1 stroke 2018 stroke 015. We get to analyze all the features one by one in a layman's language so that you get to understand everything. In case you want to invest in this particular bond, you'll be fully aware of what it is that you are signing up for. So hold on there, get to understand everything. In case you have any question in the course of this video, drop it in the comment section. Be sure that I will be able to address it. This is Finance Focus with Andrew. In case you are coming across this channel for the first time, consider subscribing, turn on the notification bell so that you get notified anytime we get to post a new financial tip. Now, let's dive into the main subject, Treasury Bonds. In case you are coming across the words Treasury Bonds for the first time, Treasury Bonds are simply loans advanced to the government by the members of the public. I'll drop a link on the description where I have explained more about that. But for now, let's deal with FXD1 stroke 2018 stroke 015. There are 3 things that you can get to tell from that title itself. FXD1 tells you that that bond is taxable. Any interest that you earn from that bond, you'll have to pay some tax for it. 2018 means that it is a paper that was issued in 2018, and 015 means that the original tenure of this particular bond was 15 years when it was first issued. Now, some of the important features that you need to understand when it comes to investment in bonds. The first thing that is very important is the time to maturity. So the time to maturity of this bond is 7.7 years, and the reason as to why it is 7.7 years, the paper was issued in 2018 for a tenure of 15 years. We are in 2025, it means that 7 years have elapsed, and that's why we have a balance of 7.7 years. The coupon rate is at 12.65%, and the coupon rate is very important because it is the rate that tells you what will you take home if you decide to put your money in this particular bond. We'll do some maths to see exactly what you will take home or what will hit your bank account if you choose to invest in this particular bond. The withholding tax is at 10%. So any interest that you get to earn, you will have to leave 10% for the government. It is not optional, and we will do the maths and we see how the figures looks like. The maturity of the bond is at 9th of May 2033. We are talking about an investment that you will have to hold until 2033. It is important to ensure that this particular investment is in line with your financial goals so that you don't end up messing your cash flows. The period of sale is simply that period that the Central Bank of Kenya has given investors time to think, analyze, look at their financial status, and decide whether to invest or not. And those who decide to invest are given a chance to place a bid within this period. Another thing that is very important is the auction date. It is the auction that will determine whether your bid is successful or not, and it will be held on the same date, that is the 15th of October 2025. The settlement date is the day that you get to seal that deal with the Central Bank of Kenya, and it is the day that you ought to have sent your money to the Central Bank of Kenya. There is a process that you have to undergo. That is after your bid is successful, you are informed. Shortly after you will be paid, you will be sent something that we call the payment key. That is just a code in a card with M-Pesa. And make sure that you include that code when you are making transfer from your commercial bank to the Central Bank of Kenya. The investment amount, you either bid competitively or non-competitively. We'll talk about that in a while. But when you are bidding non-competitively, the minimum amount is 50,000. And when you are bidding competitively, the minimum amount is 2 million. Now this bond pays coupons in the month of May and the month of November. You are aware that Treasury Bonds pays interest twice in a year. That is the interest that you are entitled to for that whole year. It is divided into 2 installments. Now, I want us to talk something about pricing of the bond because it is equally important. On my side here, I have a table that shows the different yields, the different possible yields, and the different the corresponding clean prices. Now, when you are bidding non-competitively, you don't get to choose the yield. You tell the Central Bank of Kenya, whatever the yield that will be determined by the market, I'm okay with that. But competitive bidders, they tell the Central Bank of Kenya, I want to invest 3 million, and this is the yield that I'm dictating. I want a yield of 13.5%. And it is the yield that determines the clean price of the bond. You can see on the side we have the corresponding clean prices. So you might find that those competitive bidders whose bids will be accepted, they might end up paying less for the bonds than the non-competitive bidders. But the coupon rate remains the same for both competitive and non-competitive bidders. There is also something that we call the dirty price, and it is exactly what we pay for the bonds. Let me explain what we call the dirty price. Now, the dirty price is a summation of two things. So the dirty price is a summation of the clean price, and we have seen how the clean price is established. Then we add the accrued interest. Now, allow me to explain what is accrued interest. So accrued interest, it is interest that will be given to you that does not belong to you, that you have to pay. I know that sounds complicated. Let's make it a bit simpler. This bond, we have said that it pays coupons in the month of May and November. So this is May, this is November. We are doing this in the month of October, so we are here. But you'll be paid coupon even if you buy this bond in November. 1 month later, you'll be given coupon the month of November, and you'll be given the coupon that this bond has accumulated from the month of May. So this is the coupon that you get to receive. But remember, you are not the holder of the bond all this period. But it is you who will receive this particular coupon. So you have to pay for this coupon as you buy this bond. So that is what we are calling the accrued interest. Interest that does not belong to you, that will be paid to you. The final part of this video, we are going to see the kind of figures that we are talking about when we talk about 12.65%. How does the figures look like? I will use an example of someone who decides to invest 100,000. So 100,000 Kenya shilling. The interest rate is 12.65%. It is very simple. Simple interest when it comes to bonds. Times 100,000. So that comes to 12,650, if I'm not wrong. But remember, 10% of this interest does not belong to us. It is going away as withholding tax. So it is 90% that belongs to us. So we multiply that by 0.9. So 12,650 times 0.9. That brings us to 11,385. So if you invest 100,000, you will get an interest of 11,385 per annum. But the coupon is paid in 2 installments. So we have again to divide this figure by 2. So in the month of May, you'll get 56.92, and in the month of November, you'll get 56.95. So that those are the figures as they are. There is no sugarcoating. It is important to know the amounts we are talking about so that you make a very informed decision. So that is it for this particular bond. It is now you to take your time, analyze the bond, analyze yourself. Does it rhyme with what you want? Does it rhyme with your financial goals? Then make a decision. Remember, all this is done on the Dow CSD portal. You can get a link on this same channel on how to create an account, how to place a bid. Everything has been explained. And in case you have any further question, ensure to put it in the comment section. Be sure that I'll respond to all the questions. If you found this video helpful, Don't forget to leave us a like, a comment, any feedback, and most importantly, share this video to a person whom you think they need this kind of information. Until next time, stay financially woke.